I think the partner selection and working with the right partner really is the key to success of any investment decision actually, and especially in a country like India wherein the complexities are a little bit more, and that becomes really key.
Hi Lata, it's a pleasure to have you here during the GCC India week. Also a pleasure to have GLL as one of our partners for such a long time. So very happy to have you here and participate in such nice discussions. I would like to start asking you to introduce yourself and tell us a bit more about your role at GLL and how it connects between India and GCC.
Hi Rodrigo. Good evening. Thank you very much for having me here. I'm Lata Pillai. I am the head of Capital Markets India and basically responsible for services on the land side, on core assets, or across various sectors, be it office, residential, logistics, hospitality, the entire gamut, debt and equity advisory. So that's what we actually, JLL Capital Markets offers. Why India GCC is interesting for me is essentially we are always looking for new capital who are interested to come into the country in India, and with the kind of growth prospects that we have for our country, with us being poised to be the third largest economy in the world, and real estate becomes a major fundamental pillar of that growth. It also needs a lot of capital. So any new capital that comes in is welcome. And GCC countries have been a fundamental partner to India's growth. And the relationship between the UAE and India is legendary. So we believe that we can probably use this platform to give ideas, meet new people. And one more interesting thing that we have also been seeing is the interest of Indian investors in investing in GCC, in UAE in particular. And I think it was about the capital flow either ways is what really interests.
That's great. And I think that's exactly the main reason that the GRI Institute promoted this week on a cross-border investment thinking on both sides. And the first question I would like to ask you is, how do you describe today the GCC India real estate capital history? We know that there are some success stories and there are some that didn't go as planned. So how do you describe the situation now?
I would say the interest, if anything, is only grown or is only growing. It is being a little more eclectic in what they will do or what they will not do in their selection of partner selections, on the sectors that they would really look at. And overall, one is seeing the entire climate of investment between GCC and India growing and changing. And I guess we are at a interesting space, I would like to think.
Let's suppose you got a call today from one investor from GCC.
Yep.
What's the first thing they ask you? Are they looking more some specific assets? Are they looking for some investments platform or some joint ventures, or they want some development exposure? They are interested in credit or that?
So as far as GCC so far, most of the people who have invested have been sovereigns, the sovereign wealth funds of the various countries here. And what one has seen there is they have preferred platform investments, which kind of sectoral specificity, be it office or be it logistics. A very interesting theme that we have seen where a lot of money has come in is also for the private credit space, the debt space, right? Structured credit space. So I think that's what has been the interest so far. And rather than having individual asset-based investments, the preference is to do more platforms.
And do you agree that finding the right partner is the key?
Yes, goes without saying. I think one of the most important aspect, and I think that's something which was even discovered today in our conversations, during this, is that I think the partner selection and working with the right partner really is the key to success of any investment decision actually, and especially in a country like India, wherein the complexities are a little bit more, and that becomes really key.
Great. We spoke a lot today in one of the panels about taxations and about FX rates.
Yeah.
How do you see that nowadays? Because if I can say, this is one of the scars that was part of the past. I would say between 2005 and 2015, and someone mentioned during the discussion that it's healing now.
Yeah.
So we need a bit of time.
Yeah.
Do you agree with that?
I guess so, because you've had a good about, as I mentioned, almost India has seen over the last 2 decades, $95 billion of institutional investments, right? So more than 70% came in the last decade, from 2015 to 2025. Essentially, what we are seeing as a result is that there has been adequate interest that has been come across the world. I think, as somebody said in the conversation as well, you have participation from investors across the world in India. They may not necessarily be direct, but indirectly as passive LPs, they are present almost in some form or the other in the country, and have been taking advantage of the successes that some of these funds have actually had. Unlike what happened in the first round, which was probably 2 decades back, almost 15 years back, I think things are very different in the last, say, 5 to 7 years, definitely. And you've seen a lot of exits and profitable exits, as well as reinvestments that have come from a lot of these large funds, which gives me the confidence that, some of the scars in the past have been erased. And as far as Forex is concerned, or taxation structures are concerned, there are structures available. There are which allows you to plan tax better, and which is what most people are relying on. The second thing on currency, I think it is the risk of the marketplace, but it can be actually modeled into, because there is a steadiness in the market. There's a steadiness in the economy, and one will not see the huge amount of volatility that you would see in some other currencies. So you can actually model it into your decision making, in a way, investment decision making, and which is what most of the large funds who are already operating there do.
That would de-risk everything.
They know it's a risk when you come into an emerging market, and they actually underwrite the investment decisions accordingly.
Okay. Yeah. Do you think is there a big gap between the seller expectation and the investor pricing nowadays?
Yeah, especially on the core asset side, especially on the core office assets. I guess when it's an institutional investor who's looking to buy it, they want to factor in the price, the exit options. They want to factor in all the other risks that are there. However, what has also happened is that because there are REITs who are willing to buy it at more compelling yields, so the sellers are actually be getting the kind of expectations that they have, and that mismatch is likely to continue.
It will always happen, right?
It will always happen, exactly. So you will have to figure out a way to kind of play this.
You need to find always a way to manage the gap and the expectations from both sides.
Either you will stay out of some of these investments, or you'll have a particular benchmark beyond which you don't want to go, or you will probably look at some other asset classes where you think you'll get the return.
And then that's good.
Yeah.
So if we can say in the next 24 months and the next 2 years, who will win more? Scaled players or some focused specialists?
Scale players actually have a lot of advantage. So I think when you invest with scale players, what they bring to the market, or what they can bring to any investment, is a different level of competitive edge, which probably a single asset player will not get it. Having said that, with the kind of complexity that comes in various sectors, one is finding focused players actually getting a lot of traction from investors, because they understand that a particular asset class, they understand the geographies, they understand the do's and don'ts in that particular sector, and able to make more considered decisions, and therefore become better investment managers. So, so I would not say one over the other. I guess both have their advantages, and one can't say that a scale guy will not be able to do, but there are markets for both of them actually.
That's great.
Yeah.
Lata, we have a global audience.
Yeah.
People all over the world might be watching us now.
Yeah.
Is there any message you'd like to send to whoever is watching us, talking about India, talking about GCC?
What I would say is I represent a very promising geography, that is India. It is the most populous country, the youngest population in the country, great macro trends which are there, great opportunity. It's still nascent, it's still evolving and growing. It's a great market to come in and consider as an investment location, and for the returns that people are expecting. And lot of work has been done in the country to make it more investor friendly, to make it a little more transparent, a little more organized. And all of that is where the investors who will consider India as a destination, including the GCC countries, I think it's a great opportunity to kind of
And
capture upon.
if I can add, I
Yeah.
have been to India almost 20 times for the past 2 years.
Yeah.
And talking about the infrastructure,
Yeah.
I think that whenever someone asks, how is Mumbai? I like to say that Mumbai is a construction site itself. You see bridges, you see roads, you see bullet trains being built
Yeah.
all at the same time.
Correct.
So it's kind of crazy,
Yeah.
but you see the evolution. Every month that I go to India, I see the evolution.
There's a change. That's
Yes. And the infrastructure is very connected to the real estate market.
right.
That's great. Lata, it was a pleasure to have you here.
Thank you.
Let's continue our conversations throughout the day.
Yeah.
Hopefully to see you soon.
Thank you so much, Rodrigo.
Thank you.
Thank you.